The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, how did the market trade wrap up on Friday? Another eventful week. We had that July WASDE report on Wednesday that provided a few surprises in there as well. And just a lot to kind of reassess with the markets, I would say. And joining us here today as we do just that, we welcome in our good friend Ted Seifried with Zaner Ag Hedge. Ted, good to catch up with you, buddy. How's things going?
Hey, it's fantastic. It's been the last 4 or 5 weeks have been absolutely wild. But not in a bad way. It's created a whole lot of opportunities and a lot of questions to be answered. I don't know if we've answered a lot of those questions yet, but it's a real nice ongoing debate and conversation that's happening right now. I gotta say it's entertaining, to say the least. Well, this definitely keeps everybody on their toes. That's for sure.
Yeah, that's a good point. It keeps everybody on their toes. And, Ted, I look at how Friday traded. We saw corn and wheat a little higher, beans a little lower, just kind of across the board there. But overall, I mean, we can talk WASDE numbers. We can debate what USDA gave us on Wednesday, of course. But I think the overall picture now, as we reassess the grain markets, demand, of course, we've talked about this, is such a huge underlying component of this entire trade right now, Ted.
Yeah, absolutely. Look, this is the time of year that we talk about supply, but there's a lot of us that really want to talk about demand right now because you have such different fundamental outlooks happening for both corn and soybeans at the moment, right? You have a soybean balance sheet where, I don't know. The USDA does what it does when it's a year and 2 months out of the end of a marketing year, as it is for new crop marketing year. Their supply demand, it's all based on a price equilibrium chart, right? I mean, that's really all they can do this far out. So when they lower supply, they lower demand. That's just how that works, right? And so I don't know. I mean, but the idea that soybean demand is going to be, 100 million bushels less than it was last year, that's kind of hard to, it's kind of a hard pill to swallow for me, right? Especially this far away. One, from the crush standpoint, yeah, they lowered crush 10 million bushel. But with all the new facilities that we've put up and with crush margins really continuing to be very solid, I don't know how that crush really slips much lower. You'd really have to destroy crush margins. You'd have to make these companies want to idle facilities that they just spent a whole lot of money either building or adding capacity to. I mean, look, we've just spent a whole lot in infrastructure for the crushing industry. I don't think that can slip too far. But then, so there's exports, okay, and that's where USA really chose to take the axe to that 125 million bushel. But I mean, we've seen in the past that China has this sort of insatiable need for soybeans. And listen, I think you can cut that demand if Brazil has 160 million metric ton soybean crop. But we're talking about a crop that's 9 months away from getting planted, Jesse. I don't know. We can't take that for granted, and so it's hard for me to say that. Okay, at the very least, I'll say I don't think there's a whole lot of fat on the bone to trim from that soybean balance sheet on the demand side, any more than what the USDA just did. At this point in time, it very well could be that by the time we get to the end of the marketing year, our exports are down even more than what the USDA said. But that again is a function of that potentially massive Brazilian crop, which if it doesn't happen, again, completely different story. So it's way too early to assume that for a crop that is, again, more than half a year away from getting planted. So for now, the problem that I have, Jesse, is if you cut that 52 national average yield down to a 51, then we're at roughly a 215 million bushel carryover. If you cut it down to a 50, we're up roughly 130 million bushel carryover. And like I said, I don't know if I can cut much demand at this point. Yeah, the soybeans have a story, right? If we have any continued weather problems, I mean, again, you had one of the driest April, Mays, and the first 2/3 of June on record. We've got a lot of coming back. And yes, we've started to, but we just saw a drought monitor yesterday that didn't show a huge improvement that a lot of us thought we might see after all the rains that we've gotten. But obviously we need more. And whether that continues on for the soybeans, whether we can even hit 52 national average yield in soybeans at this point, I don't know. But like I said, if it falls anything short of that, we all of a sudden have one of the tighter balance sheets that we've seen in this entire time that we've been trading at these higher level prices. It could get really spicy for soybeans, and we will be trading weather very, very closely for soybeans in particular between now and the end of the growing season. But again, a very different scenario for corn. So how this all plays out, I don't think anybody really has a very strong grasp on at this point. We all have kind of ideas on what might happen with like the corn bean ratio, and if beans can pull corn higher, if corn pull beans lower, or so on and so forth. But I don't think any of us really know. What I will say is this: is because of everything we just talked about, that for the soybeans, the soybean balance sheet, the uncertainty of that 52 national average yield, the lack, in my opinion, the lack of ability to cut much more on demand. I don't think we're in a position to put soybeans on sale.
Yeah.
What I mean is, I don't think soybeans can go sharply lower until we really know what that yield is, because we're not in a position to really go out and tempt any more demand than what we have right now, right? So I think what that could do is soybeans should stay relatively strong, again, unless the weather's absolutely perfect and we say, okay, it might be a 53 national average yield. But until we can say that, soybeans should have a lot of strength underneath them. Yep. And I think that keeps corn somewhat elevated. I do believe that we could see that corn bean ratio move out closer to 3, or possibly even go and test sort of records with that corn bean ratio. But it still does offer, I think, a little bit of optimism or a little bit of support for the corn market. And then, talking corn yields. Wow. So much to unpack there. The debate was raging before the report came out on Wednesday on whether the USDA actually could change corn yields in July without a planting delay issue. Because,
exactly.
Really, since they changed their model in 2013, the only time we've seen the USDA change corn yield before August is because of planting delays. And obviously was not the case this year. So for the fact that they did lower it in July, the market didn't like it at first because, they wanted to see, they were disappointed it wasn't more. But then I think, a day removed, a lot of the strength that we saw on Thursday, I think had to do with, hey, they changed the yield in July for a reason outside of a planting delay. That might mean that yield has more potential to go lower. So I think we had a completely market had a completely different look at that on Thursday as compared to what it was thinking initial reaction on Wednesday. And then you put that together with, like I said, that drought monitor did not really improve as much as I think some of us had been hoping. And then you look at the 6 to 10 day outlook. I mean, very basic NOAA 6 to 10 day outlooks. I mean, yes, I know we all have weather forecasters that we pay a lot more money that go a lot more in depth and may or may not agree with that and so on and so forth. But just from a very basic perspective, you look at NOAA's 6 to 10 day and 8 to 14 day, and the 6 to 10 day doesn't have, it's got normal precip in it. And there's a lot of above normal temperatures in there, which again, if you compare that to the drought monitor, I think we need more, quite a bit more. Right. And then when you go to 8 to the 14 day, it's not there. There's a lot of below normal precip in there for a big portion of the growing area, specifically areas that have kind of turned dry recently. And there's a lot of heat in that one too. So I don't know. I think yesterday we had a bit of a different feeling. The weather pattern has changed. There's no doubt about that, right?
Oh, definitely.
they're
Yeah.
getting rains in places that had not been able to get rains for going on 3 months. That is starting to happen. Certainly, there's been places that missed out, but there's been a lot of places that have gotten rains. It's just a question of, is it enough? Will it continue? And did it come in time for corn? And again, I don't think we have answers for that yet.
No.
Oh, and by the way, if that NOAA 8 to 14 day does happen, we've got above normal temps and below normal precip during when about 2/3 of this crop's going to be pollinating, there's a bit of risk there. So we might have taken too much weather premium out of the corn market, even though there are those of us, and you started the conversation this way, and I'm sorry to take it in a lot of tangents, and we're coming full circle here, Jesse. Bear with me. But I think when you look at a corn balance sheet, we're now talking about 855 million bushels of corn demand increase from current marketing year that we only have a couple months left of, or month and a half left of, into next marketing year. And you got to say how, right? Like, where is that coming from? Where are we going to find another 855 million bushels of demand for corn when we continue to have disappointing corn export sales? I hesitate to say that because we actually saw some signs of life here this week, for last week's sales numbers. But we need a lot more than that to even begin to justify that in feed and residual, in ethanol, but specifically in those exports, right? And so I don't know. There's I think what a lot of us are thinking is phantom demand on the balance sheet for corn, which allows the USDA to lower that yield and offset it with lower demand. And it could be where we'd have to get into the 160s before we start even considering the idea of getting below a 2 billion bushel carryover in corn. So again, starkly different outlook than beans. But again, this is not the time of year where we should really get too focused on demand, because again, there's a lot can change in the next year and 2 months. This is the time of year where we focus on yield. And if there is reason to think that, this corn crop isn't, turning around in a hurry, and all of a sudden we are a 177 national average yield, if we continue to cut that yield down, again, at least for the time being, that should support corn. And again, maybe we've taken too much weather premium out for the time being.
We're having a conversation today with Ted Seifried from Zaner Ag Hedge. And Ted, one other thought in corn. I just thinking about this as well. The world picture for corn, we got a ton of corn out there around the world. You think that big Seifried crop in Brazil, whatever we end up with here, the U.S., et cetera, there's just a lot of corn to chew through out there on the world scale, Ted. And that has me a little concerned right now.
Yeah, absolutely. Right. We ask questions like, where is China? Why is China not buying any corn? There's a whole lot of talks about how hot and dry China is, and corn prices in China are really getting stronger and stronger, and they should be in the market to buy corn. Well, Jesse, they are buying corn, but they have a new partner in Brazil that they can buy corn from. And I think, they are buying a fair amount of corn from Brazil, but also Ukraine, right? I mean, this grain deal in the Ukraine, the vast majority of corn exports is going to China. It's not going to starving countries of the world like it's, that's what it's meant for, right? It's going to China. As of last report, which is, I think, about a month old, China had taken almost 6 million metric tons of corn from the Ukraine, right? And so that's where China is. That's why we're not seeing that Chinese demand. And again, that's what really makes me question the demand that the USDA has on the balance sheet for our exports for next year. I don't know. Like I said, a lot can happen. Yep. I want the market to focus on yield and production right now, because again, I think that's what we should be doing. But I'm with you, Jesse. I just, I think that the demand picture is getting so cloudy. The dark clouds are just rolling in, and it's hard not to pay attention to that at the same time. And I guess really the best thing I can say, I'll go back to something I said a few minutes ago. Maybe that corn and bean ratio is just going to go out to some wild levels, maybe 3.1, 3.2, 3.4. I mean, maybe a world exists where we have $4.50 corn and $15 beans. I don't know, but I'd say if there was ever a possibility for something like that, Jesse, at least in the almost 20 years that I've been doing this, this is sort of the time frame, or this is the year that something like that might happen.
Want to get your thoughts in the protein sector, cattle and hogs, as we wrapped up the week. Any notes that you're seeing there? I know a little bit of a divergence on Friday. Cattle went higher, hogs went a little lower, but I know we got some updated production numbers from the WASD for beef and pork. Any thoughts as we've kind of wrapped up the balance of the week here, Ted?
Yeah, I think there's a lot of target to the grains market, right? Because you have, like we just been talking about, two very fundamentally different outlooks for corn and soybeans. Now, to a lesser degree, I think on the cash side of things, products cash side of things, you've got sort of different things sort of developing between beef and pork right now. Seasonally, we see boxed beef really kind of soften between the 4th of July holiday, which is really our peak demand of the year, peak grilling season. Everybody's out for the summer doing their thing. That kind of slows down as we get into the doldrums, the summer doldrums. We've had our fun, we've spent our money, we kind of want to slow down a little bit, and a lot of times, the heat gets a little bit oppressive. It's muggy. We don't want to be outside grilling as much. So beef prices kind of tail off a little bit, and that puts pressure on packers' margins, and that may put some pressure on cash. So you worry that maybe cattle are due for a little bit of a correction. The bullish fundamentals are still there, but if we have a period of time where demand's allowed to or demand is softening a little bit, as it seasonally does, that would be the opportunity for cattle to take what I would think is sort of a much needed correction to at least fix the charts. I'm not saying we can't continue to rally as we get into the fall and we get into, again, demand really starts picking up into Labor Day and then again into the holidays, right? So I'm not saying that the highs are necessarily in, but I am on alert for a bit of a correction in the cattle market. Now, all that being said, on Friday, cattle coming back really strong, bouncing off support, looks pretty good. So I don't know. Maybe that's that correction's not coming from these current levels. Maybe it's coming from a higher level. So we're watching out for that. But on the other hand, you've got pork cutout values really gaining some pretty significant strength. To me, that says that we're seeing a little bit of a demand shift out of higher priced beef into lower priced pork. And that might be part of what we do during these summer doldrum months. We might say, hey, we really went after it, leading into the 4th of July. Maybe we're just going to, look at some cheaper cuts of protein for the time being. And hey, I think that's a very welcome idea for the pork and hog market. And then also, you look at weights in hogs, we're very, very current. Those weights are below the 5-year average, and really kind of the lowest we've seen in the last 5 years. So that suggests we're very current. Not a huge amount of market-ready hogs to come to the market. So that's why you've got a lot of strength up front. And the bull spreading has been very profound in the hogs market. So I'm optimistic there's more upside potential there for hogs. Again, we need to see those cutout values continue to climb. If that happens, I do think we can see some more upside, but really centered around, I'm looking at October hogs. The December, I don't know. I think by that time, again, that demand shift kind of reverses itself again, and we'll probably have bigger weights on animals again. And so short-term bullish hogs, maybe slightly bearish cattle at some point. But again, longer term, that cattle outlook it takes years to really rebuild a herd, Jesse. We know that.
It does.
So I would think if we have a correction, it might just be that, unless there's a big change in the overall economy and we really, permanently change, not permanently, but, really do change our spending habits for a much longer period of time rather than just a couple months.
Ted, always enjoy your analysis and appreciate the time here on the show. And I know if folks want to reach out to you and work with you there at Zaner Ag Hedge, they can do that very easily. How can they reach you, Ted?
Yeah, you can call my direct line, 312-277-0113. You can also find us on the web at www.zaner.com. Also, we're doing a afternoon commentary thing where I do like 5 minutes. It's just a call-in thing. You call in and you listen to it, and that's it. So if you're interested in that, you can sign up for that too. And then, finally, if you're on the Twitters, I'm at the Ted Spread, and recently been having debates on this report, but also been talking a lot about cars and things like that too.
all the fun stuff, and I've been following some of that debate as well on your Twitter feed and whatnot. So always entertaining, always informative. We appreciate the time. Ted Seifried, Zaner Ag Hedge. Thanks for joining us, my friend. Have a great weekend. We'll talk to you again soon.
Thanks, Jesse. Thanks for having me. Always a pleasure. You have a wonderful weekend as well. And yeah, we'll talk to you whenever you're ready.
And that is going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.